Welcome to the Weekly Wrap. This Friday the 14th of August, I'm Jessica Amir, market analyst with Bell Direct. The Aussie share market rose 1.4% to Thursday, its second weekly gain. A nice addition considering we really ramped up reporting season and heard from the biggest company on the ASX, CBA. Plus, we heard from Transurban and Telstra, the 12th and 13th largest companies. This week, we saw the ASX 200 hit a two-month high, but quickly lose momentum with investors focusing on earnings and dividend growth for 2021. On the economic side, this week, July unemployment numbers came in better than expected. Unemployment rose to 7.5%, not as bad as the 7.8% forecast. It comes as a surprise. 115,000 people gained jobs in July, beating 40,000 expected. But the real test will be what August numbers will look like, as they'll reflect the new lockdown laws. Also remember, the RBA forecasts unemployment to hit 10% later this year. That's something to consider. Meanwhile, over in the US this week, we saw the US S&P 500 come within a whisker of its record all-time high. What is interesting though, in the US, of the 74% of the S&P 500 companies that have reported quarterly earnings, on average, earnings per share has fallen 34% due to COVID-19. That seems bleak, but it's not as bad as the expected earnings per share falls of 58% expected. But what about Australia? Well, we know Australian earnings are expected to fall 15% in the 2020 financial year. The biggest earnings and dividend declines expected in banks, while miners are expected to deliver the goods, with dividends not likely to change significantly, with marginal improvements this and next financial year. So what did we see this week mid-confession season? Well, CBA delivered a mostly stronger than expected FY20 result, and its shares gained 1.2% to Thursday. It was downgraded by Bell Potter from a buy to a hold with a $78 target, while UBS reiterated CBA as a hold with a $72 target. For our detailed report on CBA, please check out our website. As for the other top 50 companies, well, grey COVID-19 clouds flew over companies like Telstra, Transurban and AGL, who delivered weaker than expected earnings and dividend outlooks for FY21. But FY20 results were mostly in line with market expectations. You can catch our detailed reports on Telstra and Transurban on our website as well. However, the most noteworthy report card this week saw Treasury Wine Estates, TWE, a global leading wine company, pop its share cork, guzzling up 18% to become the best performing stock on the ASX 200, with TWE hitting a new 7-month high. It comes as TWE announced global demand for its wine is beginning to tip up, particularly in Asia and China. Treasury Wine also announced heavy cost savings in the years ahead, but didn't give an FY21 earnings number to watch out for. Citi maintained Treasury Wine as a hold, as it forecasts flat FY21 earnings growth. Although its FY20 result was a touch below expectations, you could expect TWE to see broker upgrades following its brighter outlook. UBS reiterated TWE as a hold with a $11.80 share price target. Citi targets $10.90. On the other side of the market this week, biotechnology company Mesoblast MSB took out the gong, falling the most in the ASX 200, losing 23% before entering into a trading halt. MSB didn't report financial results, but it did see its biggest share price fall since the COVID-19 crash, erasing 4 months of gains. It comes as the FDA ruled its trial results were unclear in treating children with inflammation from bone marrow transplants from bone cancer. However, if you look past that, the FDA found that MSB's product is suitable for human use and that 69.1% of the children treated had a positive response. The FDA has an advisory committee underway which is positive and so far has voted in favour of the product's efficacy and is due to hand down a decision on Friday the 14th. So keep an eye on that and secondly, the FDA is due to hand down its final drug review on the 30th of September. So keep an eye on that as well. Bell Potter is expecting a positive result from the FDA there. Now, aside from that, Mesoblast is involved in late-stage phase 3 trials for a COVID-19 vaccine. 75% of the 90 patients with severe to moderate COVID-19 infections have been taken off ventilators and discharged from hospital. So it's no wonder why MSB has gained a lot of attention and maintained that 62% share price rise this year. Bell Potter reiterated MSB as a speculative buy, and it's a top buy for the year, in fact, expecting MSB's shares to grow over 90% to $6. Now, moving to what companies are reporting next week and what's likely to move markets given their size. On Tuesday, BHP reports, along with Coles and Westpac. On Wednesday, CSL hands down their results, and on Thursday, Wesfarmers releases their report card. And lastly, on the economic side of life, we'll hear from the RBA for the first time in 2 weeks. On Tuesday, the central bank will hand down minutes from its meeting and provide details about its fresh round of bond buying. On behalf of everyone here at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. See you next week.